Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Lalani from General Assembly Holdings. General Assembly trades on the TSX Venture Exchange under the symbol GA and on the OTC under GASMF. The company is currently trading at 79 cents with roughly 22 million shares outstanding, or about a $17.5 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Tara. We today are going to talk about one of my favorite subjects, pizza. So I'm really happy to have Ali Khan Lalani here with us today. Ali, I know a little bit about this company because I had a whole bunch of pizzas sent to me and tried them out and really liked what I had. But more importantly for investors, why don't you tell us all about General Assembly Pizza?
Thank you, Paul, and thanks for having me today. I have a shot of our investor presentation up on the screen, but I think before I get into the meat of the brand and the presentation, I'd like to give you a brief background on myself. My name's Ali Khan Lalani. I'm the founder and CEO of General Assembly. After 6 years as a young multi-unit franchisee with Recipe Unlimited, I chose to divest in 2015 and pursue my dream of building a premium pizza brand from the ground up. I was inspired by the likes of Danny Meyer at Shake Shack and Steve Ells over at Chipotle in the United States. I set my sights on building something people had never experienced before, a truly unique premium pizza brand. In December of 2017, General Assembly Pizza opened its doors downtown Toronto. In our first year as a premium fast casual concept, GA made several best restaurant lists, including being named one of the best new restaurants by Toronto Life. And we made many best pizza lists within Toronto, Canada, and internationally. But most importantly, what we did is we built a pizza loving community in Toronto. In March of 2020, as the world changed, we changed with it and changed our business model. I went to a grocery store near General Assembly called Fresh and Wild the day we shut down, and I noticed that the section for frozen pizzas was empty. I chatted with the store owner who was a regular at GA, and he mentioned he couldn't keep frozen pizzas on the shelves, and most of his suppliers were back ordered for weeks. That was the moment that everything changed. I walked back into GA right after. Our chef and general manager were still in the restaurant, and I said, we need to figure out how to make a GA frozen pizza, one that was a cut above the rest and one that embodied GA's values: better, easy, and delicious. In April 2020, we launched our premium frozen pizza line. From then till now, we launched the world's first premium pizza subscription service that has shipped close to 100,000 subscription boxes to people's homes from coast to coast in Canada. And we've built the foundation to scale into 400 retail doors in 2022. And with that, I'd be happy to start walking you through our presentation. Follow me over to slide 3. Reasons to invest in General Assembly Pizza. 1, our omni-channel presence. We currently operate 3 business streams at General Assembly Holdings: our restaurant located downtown Toronto, our direct-to-consumer e-commerce channel, and our growing CPG retail business. We started with 1 store in April in 2020. When we opened up we walked into 2022, we had 100+ retail stores, and we're targeting 400 by the end of 2022. Retailers have had an increased demand in the frozen aisle. You've seen gross leasing areas in most grocery stores grow over the last little while. HMR sections have grown in premium stores like Whole Foods, Longo's, and Loblaws to accommodate more premium frozen foods. Strong revenue growth for General Assembly Pizza. Once people try our product, they come back and try it again. Number 5, strong insider ownership currently at GA. Over on slide 4, the pizza market opportunity is a big one, and General Assembly is poised to get its slice. US expected 25 billion by 2025, shifting consumer preferences to natural and organic foods, shifting trends to plant-based and flexitarian diets, and consumer demand in the ready-to-eat food section. GA pizzas cook in just 7 minutes. Those three are three key KPIs which are driving consumers, driving retailers, and driving occasions on our direct-to-consumer business. All 3 points GA is expected to continue to capitalize on in 2022 and beyond. Slide 5. I hope this slide makes you hungry. This is a slide that we currently are showcasing our SKUs, our current frozen SKUs in the Canadian market. We are not stuck in a box. A lot of pizza brands are New York pizza brands or Italian pizza brands. We just want to make really good, delicious pizza, and we're guided by 3 words: better, easy, and delicious. 75% of our current SKUs are either plant-based or meat-free. The ones that do have meat are made with all natural meats with no nitrates. We use grass-fed mozzarella, local fior di latte, and some cheeses from Italy. Our sauce is hand crushed, and everything really starts with the dough. Our dough is naturally leavened, naturally fermented sourdough, and we're in a convenient 10-inch size, which is perfect for sharing or the perfect size for one. Coming soon on the innovation side for General Assembly, we're currently working on a plant-based pepperoni pizza, which is expected to launch in the 3rd quarter. And I'm very excited to tell you all today that we've been working very hard with a plant-based meat partner called Impossible Foods, and we're expected to release their first ever co-branded frozen pizza, which will be a collaboration between both brands in the 2nd quarter of this year. Over on slide 6 is a snapshot of our evolving fresh to frozen to address consumer taste. So as mentioned before, we have 3 revenue channels. Restaurant, which typically generates roughly $2 million in revenue per year. Our restaurant footprint has been in operation for almost 4 years, and we've had a lot of P&L management and operational excellence in our restaurant. We want to take that excellence and distill it down to what could be a opportunity to expand our retail footprint in Canada and even the US eventually. And we really like that 500 to 900 square foot model of $1,000+ per square foot, resulting in 40% plus gross margins. Our direct to consumer business, we started with subscription. We launched our subscription business in September of 2020. We've currently almost delivered over 100,000 subscription boxes from coast to coast. We launched with subscription, and what we noticed in the summer of last year is that a high degree of our consumers wanted to sample the product and try the product. So we launched something called a one-time purchase in August of 2021. One-time purchase now accounts for roughly 70% of revenue on our direct-to-consumer platform. Last year, in late Q4, we launched our direct-to-consumer business in British Columbia, and we're currently delivering all over the Lower Mainland in BC, as well as all over Ontario. Our wholesale business was launched in May of 2020 with 1 retail door. It was that grocery store that didn't have any frozen pizzas on the aisle, and went back to that store just after we launched our first 5 SKUs, and Peter over at Fresh and Well happened to order 100 pizzas. We did not have 100 pizzas that day. We went back to the shop and we made those pizzas until 2 in the morning, and we delivered that order the next day. From then till now, we have over 100 retail doors currently sold in Vancouver, Calgary, and Toronto, arguably the 3 most competitive pizza markets in the country. We have a target of over 400 doors by the end of 2022. We have early guidance on some early success in Q1, where we see at least 200 plus retail doors by the end of the 2nd quarter. Over on slide 7, really want to drive home the point that General Assembly is a firmly planted premium omni-channel business. That unique channel mix really allows us to deliver a brand experience for pizza lovers, no matter how they want to interact with our business. Because we have a direct-to-consumer, because we have a CPG business, because we have a restaurant business, we're able to really deliver pizza when people want it across 3 multi-channels. Strong omni-channel businesses start to see close to double-digit returns in terms of sales year over year, with a key stat at 9.5%. Most omni-channels also see year-over-year decrease in customer acquisition costs. For example, if you bought our direct-to-consumer product in Oakville, Ontario, and then you walked into your local grocery store, you might see us on the grocery shelf. You also might come downtown Toronto to go to a ball game in the summer. You might visit our restaurants. That omni-channel experience really drives down that acquisition and that interaction into our brand. The retention rate for our consumers and the data that we have from our direct-to-consumer business really lets us build on retention with a much higher retention rate than an average hospitality or CPG business. Slide 8. GA is redefining the frozen pizza category at scale. How are we doing that? We're able to leverage our premium brand and work with other brands like Impossible Foods, and we're working on other partnerships in 2022 to further double-click down on the co-branded factor of General Assembly, therefore widening the premium experience. We're workshopping new SKUs and continuing to innovate. We're working on a dough SKU for this year, in addition to introducing a sauce SKU for retail. But really, at the end of the day, it's our product. Why do customers love our brand? Because pizza lovers don't have to compromise on quality because it's frozen. We're delivering a better frozen experience. Our par-baked 100% naturally leavened dough is vegan, and it's a canvas for us to create with. Our chef-sourced ingredients, including local cheese, hand-picked basil, and nitrate-free meats, are on trend for consumers in the premium category. I love this one, tidy freezer footprint. A typical frozen pizza is in a cardboard box. Good luck fitting 4 of those in your freezer. If you live downtown Toronto, not everybody has a chest freezer. If you have a garage or a bigger house, our pizzas are shrink wrapped in recyclable film, easily can stack 8 to 10 in a traditional freezer without the cardboard. Shorter cook time. We've learned a lot from our consumers over the last year and a half, and one of the reasons to believe in our product, and one that continues to drive repeat buying occasions, is the shorter cook time. The average frozen pizza takes 16 to 18 minutes to cook. Ours takes 7 minutes to cook. A lot of frozen brands also pick one category and stick with it. We don't. Whether you're a flexitarian, a vegetarian, or you're on a plant-based diet, we've got a pizza for you. Over on slide 9 is a snapshot of our restaurant business and what we see as an extremely scalable model to grow our retail footprint from coast to coast. Brand evolution is very important for us. We opened our restaurant in 2017. It was a birthplace of our pizzas. It's the birthplace of our naturally leavened product. It's also a culinary destination. So if you visit our restaurant downtown Toronto, most of what we sell, you can't buy on the frozen aisle. We're able to really innovate with interesting combinations in a chef-driven environment. Strong economics, 3.5 years of operating the restaurant, generating over $2 million in annual revenue, 30% contribution on gross margin. And the long-term expansion, we really like that 500 to 900 square foot model, high takeout, high technology, app-based pickups, and app-based technology. And with that type of small footprint and the craveability of pizza to many markets, we definitely have an opportunity to expand that footprint. Over on slide 10, go-to-market D2C continues to grow. As described earlier, we started with subscription and have really gone into the one-time purchase, allowing people to shop the store, if you will. For example, if you go to your local grocery store and they carry 3 SKUs, and somebody in your house loves plant-based food and someone in your house loves pepperoni pizza as well, on our direct-to-consumer website, we offer the full suite of our products. It's more of a luxurious shopping experience where you're able to click, fill your box with any of our SKUs, and then 48 to 72 hours, that box will arrive at your home. It's a great feedback loop for our CPG brands. For example, if we're entering Vancouver, and we're entering a grocery store in North Vancouver, we can take our data from our direct-to-consumer business and say, hey, based on these postal codes or FSAs and the 3 postal codes surrounding your store, we see our direct-to-consumer clients buying these 3 SKUs. These are the SKUs we think we should list in your grocery store. That type of data is unique to our omni-channel business and one that's really compelling to retail partners. We're an end-to-end brand experience for customers. From the start of the experience on our website to when we deliver at your door, that's a GA-owned channel where we control the experience from end to end. One of the most beautiful things about our direct-to-consumer business, which we saw in Ontario and we just saw at the end of the 4th quarter, was our ability to build awareness in new markets. When we launched our direct-to-consumer business in late Q4 in Vancouver, we had 0 retail presence. Within 45 days of launching our direct-to-consumer business, we had over 40 retail stores. That's a really interesting number. As we continue to double click down on territory expansion for our direct-to-consumer business, we'll use that data over and over again and drop our direct-to-consumer business into cities like Calgary, into cities like Edmonton, into cities like Montreal. And what that creates is what we like to call retailer FOMO. Retailers hear about us, they read about us, they had a friend that tried our product, and that equates to more doors on our path to 400 doors this year. Increasing brand awareness and driving down cost of acquisition. As we continue to scale up our D2C business and increase territories, there is more awareness for our brand, more eyeballs in our business, and dropping our acquisition costs. We're currently looking at bringing pick, pack, and ship in-house and a centralized shipping system for us to allow and control a shipment from our facility in Vaughan, Ontario, all over the country. Slide 11, tell you a little bit about our go-to-market, our distribution footprint built to scale. In August of last year, as we were scaling up our retail business, we brought on Propel Natural Foods as our Canadian broker. Propel has a 20-year experience in the better for you natural category, represents other brands like Flow Water, Midday Squares, and Sapsucker. We then leveraged our relationship with Propel to sign UNFI as our national distributor in Canada. UNFI is the largest publicly traded better for you frozen distributor in North America. And with the 2 of them, we were able to start really pinpointing formal listing applications for the largest grocers in the country. And we're currently negotiating listings with Sobeys, Loblaw, and Whole Foods. Sobeys and Loblaw controlling north of 80% of the Canadian grocery market within all their banners. In the summer of 2021, we were fortunate to receive a pilot with a premium brand at Loblaws called Fortinos. That pilot went very well over the course of the 3rd and 4th quarter last year, and we're expected to roll out to all 23 Loblaws owned Fortinos stores in the 2nd quarter of this year. UNFI's Canadian network of large, mid, independent grocers is over 5,000 retail doors in Canada. And as mentioned earlier, we've got strong visibility into 200 plus doors by the end of the 2nd quarter, getting to almost half of our 400 door projection for 2022. Over on slide 12 gives you a snapshot into who we're covered with, who we're currently selling with across the country. A nice snapshot, but there's a lot of white space on this particular slide. As we continue to grow our relationships from coast to coast, we will continue to expand into premium retail in Canada this year. Over on slide 13, our go-to-market state-of-the-art facility in Vaughan, Ontario is an interesting and very unique part of the GA fabric. GA is wholly owned manufacturing. We do not co-pack. We own the complete manufacturing process of our product, right from the dough into the topping line, into packaging, storage, and then shipping. As we continue to grow our business, on the right there is a snapshot of our expected capacity growth for fiscal 22. currently at a capacity to make up to 100,000 units a month, scaling to 150 in Q2, 175 in Q3, and topping out at 200,000 units per month by the fourth quarter of this year. We're bringing on net new technology like cryogenics and inline cooling in the second quarter, which will allow for a higher quality product, a more consistent product as we scale up. Also higher throughput. As we continue to put pressure on opening retail doors and increasing capacity, key inputs such as cost of goods sold, food cost, and labor costs will continue to have downward pressure in 2022 as we scale up, increasing the profitability and the contribution margin of our products, whether on our direct-to-consumer or CPG channel, as all frozen pizzas are made at our wholly owned bespoke facility. We're currently scheduled to complete our GMP, Good Manufacturing Practice audit at the end of the second quarter of this year, which will lead into the GFSI audit in early 2023. GFSI is a requirement for brands like Costco, which will also lead into us applying for our FDA number at the end of 2022, which will allow us to sell our product in the United States. As we continue to build our business, as we continue to grow our capacity, and as we continue to reach our 400 retail doors in 2022, we will bring on more process flow equipment and more automation at the plant. Slide 14. So this is a snapshot into revenue, retail doors, and frozen units sold from fiscal 20 into fiscal 2021. Year over year, we grew revenue by 124%. We grew retail doors by over 400%. My favorite stat on this slide, we grew frozen units sold at just over 750% year over year. Strategic priorities on slide 15 for 2022, national expansion, doubling down on 400 retail locations by the end of this year, continued geographic and territory growth from coast to coast, driving retail awareness and brand awareness through improvements in our D2C business, and concurrently launching net new territories with D2C while concurrently launching a retail strategy in those specific retail geographic zones. And number two, optimizing and scaling margins. The more we increase capacity, the more we sell, the higher the throughput on our units, therefore reducing our cost of goods sold and labor, therefore increasing our path to profitability in 2022. Slide 16 gives you a snapshot into the executive and leadership team, led by myself, our Chief Financial Officer, our software engineering lead, our marketing lead, and our Chief Operating Officer. Slide 17, we have a snapshot into our board of directors. Ted Hastings as chairman, Nicholas Reichenbach, founder of Flow Water, heading up corporate our compensation committee, Ben Colabrese, our audit chair, Karen Zucala, heading up corporate governance. Slide 18, the whole pie. This is a pic of our cap table. Current market capitalization of roughly 2 weeks ago at just over 15 million, just over 22 million common shares out. Total common shares on a fully diluted basis, just under 40 million. And with that, I'll turn it over to you, Paul. Thank you for joining me on our investor presentation.
Excellent. Thank you so much, Ali. Great presentation.
Thank you.
Appreciate it. Where do I start here? I mean, you covered a lot of things here. I guess one thing is, this is still, I'm almost say at its infancy. How do you get more people to, understand the sort of the proposition here? I fully understand your omni-channel sort of process, but how do you get somebody who's sitting in the middle of Vancouver right now to try and subscribe to this product?
We have a very well formulated acquisition strategy where we leverage social networks such as Instagram, Facebook, YouTube on targeted advertising and awareness. We have a strong PR team from coast to coast that gets us into print media and more importantly, an aggressive strategy for retail door growth across the country. So whether you see our ad on Instagram, whether you're watching a YouTube channel or see us in your favorite grocery store, that all leads you towards the General Assembly brand. And whether you're buying at a retail door or clicking through an ad online, which gets you our direct-to-consumer space, that's our ability to convert users within our omni-channel business.
Now, I was fortunate enough. You guys sent me some samples, and I've got to say that as far as frozen pizza, they're clearly some of the best frozen pizzas I've ever had. How, like, the subscriber portion of it, how much do you usually see in terms of orders per month? Give me a sense of sort of the average subscribers, bill per month, if you want to call it.
Yeah, so ARPU currently sits roughly at $75 per month, and that's pretty consistent from coast to coast. And we're seeing an average of roughly 7 pizzas per box from coast to coast. And that 7 units is an amalgamation of our one-time purchase in addition to our subscription business. So that's the average ARPU per month, unit per month, and the average reorder is every 4 weeks for our subscription business. And generally 3 to 4 occasions per year for our one-time purchase business.
Perfect. And before I keep going on here, I want to remind everybody, if you do have questions, which I see a few people have, if you got questions you want me to ask Ali, please use the chat function, and I'll do my best to ask that question. Okay, so good. So roughly $75 a month. I mean, how long have you guys been with the subscription model? More so to understand what kind of data you have right now, because really the next couple questions are around sort of churn and any sort of semblance of long-term value of your customer.
Currently seeing, we've been in the subscription business or direct-to-consumer business and deriving data out of that channel since September of 2020. So we'll be 2 years in September of this year. We were subscription only until August of last year, and then now one-time purchase and subscription. We're seeing a blended, for our subscription business, we're seeing roughly a 6-month LTV. Churn is a harder one to pin down now that we've amalgamated one-time purchase and subscription together. It's a function where, because we have such a high degree now, 70% of all revenue now one-time purchase, it's harder to give a reflective number for churn, but better than average is what I can say.
Mm-hmm. And of the other 30% of your revenue, how much of that is subscription?
30%.
30. Okay, gotcha. Cool. Okay, so now you mentioned you're in Vancouver and Toronto right now as far as the subscription and one time, or maybe more cities one time, but I'm just trying to get a sense of what's it going to take for you to go into any of the other sort of major cities across country?
We're currently covered in pretty much all of Ontario right now, right from Ottawa down to Windsor along that corridor. Currently all over the lower mainland of BC. As we continue to explore cost savings and bringing pick, pack, and ship in-house, we're also exploring bringing in a centralized shipping to our facility in Vaughan. So we expect by the summer of this year, we will have that in place, therefore opening up every major center in Canada for our direct-to-consumer business.
Fantastic. And then give us a sense if you've got it, but what's your customer acquisition cost right now?
Blended, for fiscal 21, in that roughly $40 range.
Okay, gotcha. Perfect. Why don't we jump on a couple of the questions that have come in here? First one is, how did you guys come up with the name General Assembly Pizza?
It's a great question. General Assembly was created, it's kind of a double entendre. The general part was an homage to the Industrial Revolution. So General Electric, General Motors. When you come to the restaurant downtown Toronto and you see what we call our pizza theater, we've got about 5 or 6 people. Somebody's stretching the dough, somebody's topping the dough, somebody's taking it off the counter, putting it into the oven, somebody's taking it out of the oven, onto the past, cutting it and sending it into the dining room or for takeout. So that's kind of like our industrial revolution. It's that homage to the assembly line. And assembly was a childhood thing for me. The word assembly always reminds me of being in school as a kid, and everybody comes together 2 or 3 times a year for an assembly. The social act of eating pizza and bringing people together is assembling people. So we thought, we have this age-old ancient technique of making pizza the old way, the right way. And we have this kind of beautiful way of bringing people together through pizza. So that's how General Assembly was derived.
Very cool. Very cool. Why don't we talk a little bit more about the financials? Now, you just went public not too long ago. How much money did you raise?
We closed our Series A almost a year ago. And proceeds to General Assembly after that raise were just under 10 million.
Okay, gotcha. And give us a sense of where you're at now. How much money do you have, and any sort of near-term financial requirements or capital requirements?
At current balance sheet is just over $1 million. We're currently expected to planning a potential financing or equity raise in the coming months, and the use of those proceeds will be to continue to fund the national expansion of our 400 door goal of this year, increasing marketing and awareness support for fiscal 22, in addition to investing in more equipment for the plant in terms of automation and process flow equipment to optimize our facility to get us to that 200,000 capacity by the end of fiscal 22.
Gotcha. Yeah, I'll take another question here. Okay, so somebody just checked the website, they said, and couldn't find any info on weights of the pizza or nutritional label. Is this deliberate? If I remember correctly, I think on the packaging I saw there is nutritional information there. Maybe correct me if I'm wrong.
Absolutely. There is, and I can kind of follow up with you after if there's a specific person that would like some navigation assistance, but it is on the website. There is nutritional information and gram weights. And as you alluded to, Paul, all of the information is on every single pizza as well.
Fantastic. Let's take another one. How quickly do you break even on a newly opened store?
So generally, assuming we did something in that 500 to 900 square foot range, we're probably looking at roughly a 500 to 600 per square foot build cost all in. So take a 500 square foot example at the highest rate of $600 per square foot. You're looking at roughly $300,000 build cost there. You're looking at roughly $750,000 a year in sales based on historic data for sales per square foot. If you take roughly a 10 to 20% net income, you're looking at a 3-year payback per store, which puts us into the 90th percentile for restaurants.
Mm-hmm. Well, a bit of a follow-up to that is it's part comment, part question here, but the questioner says, I was surprised to find out the stock price appreciation of Domino Pizza from IPO to a certain point in time was in the top 10 for all stocks. And he's wondering why that might have been, and did you use that as a case study?
I've been an avid Domino fan since probably I can remember. And I remember when reading a Harvard case study when I was in my undergrad about, I think it was probably around 2005 when Domino's said, we're a technology company that sells pizza. We're not a pizza company anymore. And I think that, I look up to that and I reference that from time to time as, an aspirational pizza brand, and probably one that does it better than anybody else on earth when it comes to a global powerhouse in pizza. So very impressive, a lot to learn from Domino's, and a super fan myself.
No, I think that's a good point, that a lot of companies are sort of technology companies masquerading masquerading as other products. So a good thing to point out there. And then lastly, from our listeners here, what's the average price point for Tino's compared to subscriptions?
So we've kept the SRP, so suggested retail price for our frozen pizzas at grocery, such as Fortino's, very similar to the price on our direct-to-consumer platform. So at Fortino's, we're roughly $10.99 per SKU, and we're online we're roughly $11 per SKU. SRP, as you would know, is subjective, and retailers are able to move those SRPs up or down based on their stores and their demographics, but almost equal.
Okay, fantastic. What's your biggest challenges you're facing right now?
Today when we look at the Canadian market, it's supply chain, if you're building a new restaurant, is pushed out a little bit. Everybody's looking at inflation numbers this year. You can only take so much pricing. I think for us, I look at that and I think we're able to position our product in a premium price of, call it roughly $10.99 to $11.99 at shelf, which is also married up to our D2C business. Those are positive contribution businesses right now, and as we're able to continue to build margin improvement with cost of goods sold and labor, I think we'll be able to thwart against a price increase as we continue to create margin. But inflation is top of mind this year.
Mm-hmm. If we were looking sort of 5 years out, what does this business look like? And we're not talking necessarily just revenues, but give us a better sense of what you think General Assembly Pizza looks 5 years from now.
If I had a crystal ball that could peg 60 months or 5 years out, I would be I'd be a happy person. But I think in 5 years we're a globally recognized premium pizza brand, and we've got our hard work is this year. We're focused on making sure that now General Assembly is a household premium pizza name in Canada in fiscal 22. We're excited about entry into the U.S. market next year, and after we get into the U.S. market, our sights are squarely set on becoming a global pizza brand, and a $25 billion frozen pizza TAM. We just want our slice.
I like the term slice there. What's your best-selling pizza?
The Loving Cup, the all-natural pepperoni, is our best-selling SKU.
Fantastic. And what's your favorite?
My favorite is the Mila Margarita, and Mila is actually the name of my daughter, so that's my favorite pizza.
Oh, fantastic. Great. You got some very unusual and eye-catching names, I have to admit that. Ali, as investors standing by and watching you guys grow your business, what sort of catalysts or metrics do you think makes the most sense to watch as you guys grow?
We've got, I think making sure that we, watching our retail door growth this year and watching our retail growth next year is very important. So that's a great KPI that you want to keep focused on. We've built something called our build to bake ratio, which is what's our capacity at the plant to how much we're selling. You always want to have, you never want that at 100%, too close or over 100%. That's a good problem to have. But as we continue to scale the business, as you would have seen in our corporate report, which was released just a couple weeks ago, we had a few KPIs in there where we talk about utility and capacity through the build to bake ratio and focused on retail doors for this year.
Fantastic. So listen, we're sort of near the end here. I'd like to give you an opportunity to sort of talk about anything that we sort of missed, or if you want sort of a key message or a parting message you want everybody to walk away with about the company, what would that be?
Sure. Thank you all for attending, and thank you, Paul, for having me today. And I'd like to leave you with 3 words. It's 3 words that we've distilled our business down, which is our guiding principles for every business stream we have. And that's better, easy, and delicious. Every single day we get up and we try to, when you look at our pizza and you put our pizza in the oven and you eat it, you should think 3 words. It's a better frozen pizza. It was easier to make because it was ready in 7 minutes, and it was damn right delicious. So if we keep focusing on better, easy, delicious, I think we're going to build one heck of a pizza business.
Mm-hmm. And I will admit, these are very good pizzas. So he's being honest here. What if somebody wants more information on the company, and more importantly, if somebody wants to order pizzas, what's your website address, or what's the best way to do that?
Sure. Ordering pizzas is easy at gapizza.com and reach out to the fine folks at Sophic Capital for any investor information and happy to make myself available.
That's fantastic. Thank you so much. Okay, so we've been speaking to Ali Khan Lalani, CEO of General Assembly Pizza. Ali, thank you for joining us today. And listen, we look forward to catching up with you in the future.
Thank you for having me, Paul. Have a good day. Thank you.
Thank you.